Hello and welcome to our special show, MultiCap Muddle. The reason we are calling it the MultiCap Muddle is because that's exactly what it has become ever since SEBI came out with a change of rules post trading hours on Friday. What do the new rules say? Very, very simple. Earlier, the multi-cap category of mutual funds allowed the fund manager absolute and complete flexibility in investing wherever he or she wanted, large caps, mid caps or multi-caps or small caps. But now SEBI says it needs to follow a 25% mandate, at least for 75% of the folio. It needs to be equally divided between large, mid and small caps. Huge number of questions arising out of this. Is it going to make the multi-cap category more risky? What should one do? Is there going to be churn? Will schemes merge? And what should you, the investor, be doing? Which is why we've got the experts joining in to answer a lot of these questions and get you some more clarity. Mohit Gang of Moneyfront is joining in, and also Kshitiz Mahajan of Complete Circle Consultants. Thank you very much, gentlemen, for joining in. And I know, our viewers have been tweeting away over the last almost 3 days now. And I want to get to the queries ASAP. Before that, your initial take. We haven't heard the last on this as yet, Mohit, have we? There's still a lot of consultation going on.
Oh, yes, absolutely. I think I saw a SEBI clarification coming through on Sunday evening, right? So that's a new from SEBI. Issuing a clarification on Sunday evening that fund houses can explore other options as well, which means they can reclassify their schemes into existing categories. They can try perhaps merging the schemes into some other schemes and providing an exit option to existing investors via switch or moving into other schemes of the same fund houses. So there are multiple options being explored. I don't think so the impact will be as huge as we made out on Friday. But yet, I think there is still a lot of ambiguity around this whole thing.
Oh, yes, absolutely, which means, some sleepless nights till we actually get the fine print clarified with the regulator. Kshitiz, your thoughts?
So, Surabhi, structurally, I feel this is a very good move. So, having said that, I've spoken to a couple of CEOs and CIOs where I have got, assurance from their side that depending on it would be rest in the hand of an advisor or a client in his portfolio how he want to move. Let's say if he has a roadmap or asset allocation wherein he want to define how much small cap, mid cap, and large cap. Once every scheme will decide which direction they will go. Like there are a lot of options. They can merge with large cap, or they can actually look at launching a ESG fund in this form, or maybe some other part. So depending on that, slowly and steadily we'll have more clarity on this. Having said that, but the move is from the regulator is very right. They want to live true to the label with some multi-cap fund. They want all cap to be in it, and there is a flexibility given. And I agree with Mohit that what he is saying, it's a new norm from SEBI that on Sunday evening they have been giving clarification. And I must say that it's a good move, and they've been hands-on in taking feedbacks, and if anything is required to be done, they'll be more than open to take feedbacks also.
Okay, well, you know what? I'm not going to be doing the quizzing on the show because we have our viewers who want questions answered, and let's actually go through that straight away. Our first query is coming in from Ankush, and his question is pretty simple, straightforward. He's saying, will all existing investors in existing multi-cap schemes be impacted? Let me throw it to you. Let's go over the timelines, Mohit. I think this comes into effect in January, right? So who gets impacted?
So in every Jan, AMFI comes out with a list of what qualifies as large, mid and small. And SEBI has given an implementation timeline of 1 month post the AMFI releases it. So Feb 21 is the cutoff time. And most of the multi-cap schemes will either have to reclassify or merge. In that case, the investors don't get impacted. Honestly, and I think investors can continue and stay put in the existing schemes if there is a reclassification or merger. But where the scheme will change the category allocations and move more towards small and mid, and we all know as a factual matter that small cap allocation across the board is roughly around 5.8% today, and the mid cap allocation is around 16%. So they need to cover a fair bit of distance to move to SEBI stipulated numbers of 25 odd percent. So if the scheme actually moves that distance, then there can be a material impact in terms of at what prices do the schemes buy the fresh mid cap and small cap allocations. And in that case, Surabhi, I think investors have to be very well aware. They need to read out what each fund house is doing with their respective schemes, and they need to take a call appropriately. If the scheme is actually moving true to label as per SEBI directives, then they need to reassess their position, their risk allocation, and perhaps redetermine whether they really want to stay put in the scheme or not.
Okay, in fact, just that, the whole option of being true to label and the option of redesignating your scheme, not calling it a multi-cap fund anymore, but choosing one of the other categories. And just for the benefit of our viewers, way back in 2016 is when SEBI came out with a very clear categorization of mutual funds, specific 9 to 10 categories for equity, 16 categories for debt, defining what each of these categories stands for. So, Kshitiz, comment on this. Now, if AMCs decide to opt for a reclassification of the scheme, then instead of calling it multi-cap, what might these funds become? How might the branding and the naming change?
So, Surabhi, there are three options right now. What is available? One is they can go into focus strategy. With the schemes which are having, corpus which is around 10-15,000 crore up to, they can still manage to get into a focus strategy. Other ways of looking at it is they can either, like many of the multi-cap scheme, if they still feel that there is a lot of value left on the large cap side of the portfolio, and they have clients which are focusing on those schemes to invest more, they can merge it with the large cap category. Third is they can look at, at entry level, they can actually file for a new scheme, which is a Flexicap, which is a new idea, which is now, actually, if you actually see with the Twitter or Instagram or, LinkedIn, that is actually going around that there can be a new category, which is Flexicap. Another way of looking at it is you can actually launch a ESG fund and convert the current set of your portfolios into an ESG fund, where you get a lot of, multi-cap availability. You can actually invest through all the caps. So these are the type of schemes through which one can actually look at merging the scheme or maybe opting for a new fund through which they can actually safeguard the interest of the existing investors. But having said that, Surabhi, the main point is that at investors' portfolio level, if he is over concentrated in small cap or mid cap portfolios, then he should be bothered about that. But if he is not, then my sense is we should allow all the AMCs to get back with what they are doing with the schemes, and then one should take a call. There should not be any in taking it.
Kshitiz, that brings me to the next query. So now I think viewers have understood that these are all the different options that a lot of AMCs will look at, and they'll also discuss it, of course, with the regulator, because the regulator has said that these options are available. So it depends on what the fund house wants to do. The second query that we have comes in from Ajay, and he's asking exactly that, Mohit, that, what's the best option for me if I have money in multi-cap funds now? Wait and watch? Is that what you'd say, or start thinking about what to do next, Mohit?
No, absolutely. I concur with Kshitiz out here that wait and watch for some time and let fund houses spill their beans out, right? So let them come out and tell whether they are reclassifying, they are merging, they are recategorizing into some other category, or indeed they are moving towards the new allocation, and that will determine the path as to what investors need to do. So perhaps wait and watch. I think a lot of representation has been done from MFI to SEBI, and new proposals, and one includes reclassifying or introducing a new category called as Flexicap altogether. We also need to know, Surabhi, that this was the only category available where fund managers had full flexibility. Otherwise, there's no other category today where there are no restrictions which are being levied by SEBI, right? So this was the only category. And once this has also got taken up in terms of few boundaries, then there is very little leeway left out in the industry for their own creativity and so on and so forth. So I think investors should wait and watch and see what the fund houses are doing with their respective schemes, and then take a call. Don't rush in, and don't jump at the first instance of taking a call.
Okay, fair enough. I want to play out for our viewers what the AMFI chairman, Nilesh Shah, who also heads, of course, Kotak Mutual Fund, what he had to tell us, because obviously AMFI is collating a lot of these views and is going to be in dialogue with the regulator. This is what Nilesh told us.
We would love to ensure that there is minimum disturbance to our portfolios. We will comply with true to label positioning, and we will ensure that we don't end up buying small and mid cap stocks at more than appropriate valuation. So SEBI has always kept open door policy for mutual funds. And even in this circular, they have written that we will be happy to have suggestions from the mutual fund industry. I'm sure if we go with data, logic, and rationality, they will listen to us and take appropriate action. While there are multiple definitions of true to label, finally we have to adhere to what regulator believes is right. At the same time, I'm quite confident that SEBI will listen to any suggestion backed by data and rationality. They will not do anything which will harm investors' interest.
Okay, well, that's the Nilesh Shah telling us what he thinks. Ties in with a question that Rishabh has sent in. That's the next query. Rishabh is saying, are there possibilities of... Rishabh is asking us if experts are expecting any amendments to the circular in the coming days. Kshitiz, your best bet. Do you think it'll just be about merging or rebranding and renaming the scheme, or do you think there is a possibility that this could be done away with as well, some sort of a pullback or rollback?
So, Surabhi, just for the benefit of all the viewers who are watching, we need to understand that only 3% of people participate in mutual fund. And at the same time, why regulator want to do the label philosophy going on with multi-cap funds also? Because anybody who's coming in new, he thinks that multi-cap, then it should have all the cap. I can understand that the existing set of investors what are thinking that we have opted for these funds where more portfolios toward large cap and mid cap side. But we need to understand that we keep on asking, we keep on debating on this that there should be any amendments. SEBI has done the right thing, and the options are very fluid. It's very open. They are very open to the feedback. Rightly said by Nilesh sir also. So my thought is that you might see there is another category which they must approve for the flexibility of all those funds which are right now operating, because they are very clear. They want to run multi-cap like Iron Man, 25, 25, 25, swimming, running, and cycling. So you have 25 large cap, 25 mid cap, 25 multi-cap, and there is an option of 25% which you can look at participating among all three, depending on market scenario and depending on the fund manager philosophy.
Okay, so this is a debate whether you should have a straight-jacketed approach that multi-cap by discipline will make you invest 25% in mid-caps and 25% in small caps, or whether it should be the flexible approach. We're going to take that up with our experts along with more of your questions, but first, a quick break. Welcome back. You are with us as we are trying to tangle through, or untangle rather, the mid-cap muddle. I just want to pull up the graphic once again for our viewers. That graphic plate tells us how little the exposure right now is towards mid-caps and small caps. Let's pull up that list. Kotak Standard Multi-Cap, which is a very, very large size fund, actually probably the largest in the category. There, the exposure to small caps is just 1%. Exposure to mid-caps is around 18%. And then you're seeing the others, the HDFC Equity Fund, again, it's a huge fund. The exposure to small caps is just 3% of its corpus. And that brings us to the next question, which is coming in from Nikki, I think. Nikki is saying, why shouldn't we invest more? Multi-cap fund returns have always been low. This change will probably propel returns as fund managers move to small caps and mid caps where valuations are attractive. So he's offering a different side to the debate and perhaps a valid side at that. Mohit, let me toss this to you. On one hand, yes, people haven't gone towards mid caps and small caps too much. But on the other hand, the argument is about confidence, comfort, and credibility. Shouldn't I leave that decision with the fund manager rather than having a very straight-jacketed approach?
Surabhi, yes, I am a firm believer of both art and science in this game of fund management. Look, so you can incorporate as much science as you want. You can give categorizations, and perhaps I think it's to an extent the regulator has to do that. They have to manage all sections and interests of the retail investors to a larger extent, right? But you have already given a lot of categorizations, which was given in 2017. It's just 3 years. Let them stabilize. Let markets be aware of what they are, and let actually every fund house fulfill the entire shelf, get all products out in the market under each category. Now, multi-cap, as I said previously, was the only category where fund manager had the ability to do whatever he wanted, as long as he was keeping 65% in equity. And that's got taken away now. Focused is a little closer to that sense, but it is restricted to 30 stocks. But Focus still allows him to move across market caps. So I agree with you to some extent in that sense that one or two categories should be given where leeway is provided to the fund manager, and maybe you can now reclassify it and call it a Flexicap, which the industry is arguing for. To answer what Nikki is saying, look, from a very long-term perspective, I think once you're investing, you have to take care of your risk profile. You have to see whether your risk profile allows you to invest, and how much does it allow you to invest in mid-small categories. You can perhaps go and buy separate mid and small cap funds if you really want to take that call. I would rather stay away from multi-cap category for next 4 to 5 months till the situation stabilizes and we clearly know that which scheme is taking what stance. Today, I don't know whether a multi-cap scheme which I invest into will remain a multi-cap scheme. It might perhaps convert into a ESG fund or a focus fund for all that I know, right? And it will still not take small cap, for which I'm wanting to go for. So let's wait for 4-5 months. And then as the situation evolves, we can go into that category. Right now, I would advise that you move towards large and mid-cap category or a focus category. If at all you want a slightly more diversification across market caps.
You know, let me take that point to you as well, Kshitiz. I know you're batting in favor of this for the long term because it will give more exposure. I mean, as an investor, my portfolio will have a greater exposure to small caps and mid caps, which it doesn't today. But I'm saying my counter argument is, why should I be straight jacketed into a 25, 25, 25? Why wouldn't I want to come to my advisor and say, look at my overall portfolio, suggest a good small cap or mid cap fund if you think it's required? Wouldn't that be a better approach to have?
So, Surabhi, first of all, let me share with you that, obviously Mohit has presented his view, but my sense is that one should not wait for so long. The clarity will come in next 10 to 15 days time across fund houses, how they want to take this, fund things forward, whether they want to merge it, they want to, maybe few of them will decide to give back money also, because if they don't see value in mid and small cap, in the best interest of client, and I will, ensure that from my side, whatever I have spoken to people in the best interest of client, they will not give away, allocation to small and mid-cap fund, irrespective of whether the allocation is required, then maybe there's the option of giving back. Now, answering your question, when you are saying that, why don't you go for a plain vanilla, caps fund, like small cap or mid-cap? So at investor level, if it is defined, let's take, for example, 40, 40, 20, 40 large cap, 40 mid-cap, and 20 small cap. And if that percentage is now shaken because of the new regulation, one should look at an allocation after everything is settled down, and then one can decide. Now, when you say why can't he go into a mid cap? In mid cap, also the regulation is 65% up to mid cap, and remaining can be in any cap. So it's not that 100% is going to be there in mid cap only or small cap only. The allocation is 65%. The only fund which is truly limited to its category is your large cap, where 80% plus is large cap category. And you see most of the funds are actually maintaining 90% in large cap category. So idea is that even in small cap, mid cap, buying those funds is not a wrong thing. One can do that. But having said that, just stick on for some time to their existing multi-cap fund. They will see clarification coming in next 10, 15, 20 days time. And once the clarification will come, you can move on. But still, 25%, when you say why to stay in 25% category across sectors, my request is that to all clients is still 25% is open. That can go to large cap also. So in large and mid cap category, if you see 35% has to maintain in various categories.
Sure.
So idea of this discussion is that one should understand that they can have individual funds also, but they can have a fund also. I don't see this category vanishing.
Sure.
I must say that maybe some other funds will join in.
Okay, so you don't think that the multi-cap category is going to go away because of this regulation? We'll have to wait and find out. Interesting question coming in from Nikhil Vadia. Let's pull this one up. Now, Nikhil wants to know whether this is going to propel people towards PMS, portfolio management schemes, where the fund manager really has absolute and full flexibility, and he or she can pick any stock. Doesn't matter, market cap doesn't matter. He's out there to generate the best alpha. Mohit, but then PMSs are not for all. I mean, they come with an entry-level threshold in general, but do you expect this is going to be beneficial for PMSs?
No, so I think, look, these are apples and peaches, fairly different comparisons and different kinds of products for different kind of investors. PMS is for ultra HNIs. The minimum ticket size has now been upped to 50 lakh by the regulator, right? So not everyone can afford that kind of a ticket size to go into a PMS product. For retail investors, I would say if you really want to replicate a PMS idea, then focused category comes the closest. A PMS is a concentrated portfolio of around 15 to 20 odd stocks. A focused is a concentrated portfolio of around 30 odd stocks. And both the products gives the fund manager full flexibility to move across market caps and be sector agnostic. So I would say the closest replica is focused. If you really want to get into a PMS kind of a thing, you might consider focused. And if you have the wherewithal, the ticket sizes to afford to go into a PMS product, yes, then by all means you can consider.
We have to start winding up, so I want your take on the biggest multi-cap schemes, because that's where bulk of our viewers are, the investors are, that's where the money has been. So let's say on the Kotak standard multi-cap, till we hear more from the AMC itself, Mohit, what would your advice be? Overall, how do you find this scheme? And if they decide to change their name to one of the other categories like ESG or something else, or large and mid, should one remain invested?
Look, Kotak has delivered fantastic results for the clients. It's 30,000 crore or 29,000 crore for a reason. Clients have trusted with the money and the scheme has delivered clients the return. So that's the reason. I would recommend that investors stay put, because there's been a lot of clarification from the fund house. Nilesh has himself come out personally today and across forums he has maintained that they are considering all options, reclassifying the scheme as flexi if the regulators permit, or merging it, or perhaps classifying it as a thematic fund and maybe giving it a shape of a ESG fund. So in all those versions, there is not much damage which is being done to the core fabric of the scheme. And I would recommend investors stay put and see for next 15-20 days what is the course of action being adopted by the fund house. And
got it. So I'm going to speed through because we want to cover 3 or 4 of the largest funds in the category. On the HDFC equity fund, where we're talking about assets under management of nearly 20,000 crores, stay put, what to do, how to decide, and how do you evaluate the fund minus of, this volatility that's come in because of the new norms. Let me put that to Kshitiz.
So Surabhi, as rightly said by Mohit on the Kotak side, I think right now for all the investors across funds, right now just stay put, just wait for the clarification coming from the fund house. And it's too early in a day when we start talking about whether one should switch or stop. My further suggestion is if you have a running SIP or STP going in the fund, there is no need to stop. Allow the clarification to come from a fund house. And it will not take long. It will take 10 to 15 days more. It's a good fund. It's a good fund house. Just stay put. There is no need to do much with the fund.
Okay, one quick last question. Mohit, since you brought this up, I mean, the Motilal Oswal MultiCap 35 is the other big fund in the category. If schemes want to reclassify themselves as a focus fund, then the number of stocks has to come down, right? What is the average number of a diversified multi-cap basket right now? And how will that variance play out if the reclassification is to happen?
So it will be a tricky job. Honestly, the larger the multi-cap scheme, and the top 5 schemes will all have stocks upwards of 50 in the portfolio. 50 to 70 is the normal size for the larger multi-cap schemes. And if they have to really come down to a focused category, that will mean coming down to 30 stocks and having large concentrated bets which is not so easy for fund managers to actually change that kind of a style suddenly, immediately, which still mean that they will have to go and sell out 40 stocks in the market, right? And that can't happen without disrupting the overall price mechanics. I would rather argue that more than focused, large and mid cap is a category which will get benefited because of whatever, which will see more movements, and perhaps mergers will become more common rather than scheme reclassifications. Not everyone has space on the shelf which is empty. In Motilal's case, I think they have space empty and they can perhaps reclassify the scheme, but others will have to opt for more mergers actually.
Absolutely get that point, because remember, viewers, that according to SEBI, you can only have one scheme per category. You can't have 3 different large cap funds in the same fund house, or 4 different, large and mid cap funds. So it's very interesting times, and the takeaway from our experts is very simple. Stay put. Stay put and watch this space as developments unfold. And we here at CNBC TV 18 will make sure that you're on top of the developments and make sure that your money is being put to work in the best possible way. Kshitiz and Mohit, thank you very much for taking all the viewer queries. That's a wrap on this special show. Thank you for watching.